Hey there, guys. I know you guys were anxiously waiting for the average true range and a tutorial on the average true range. Uh, as you guys know on Telegram, I'm at the Godfather in Crypto, or also known as Kenyan Landers. And to some of my trading friends, they call me Kapi because I love GBP that's my pet. But guys, it's I'm glad you guys are catching onto the average true range, guys, and it's gonna be an amazing it's going to be an amazing journey for you with the average true range. There are up to four different strategies using the average true range, and one is obviously chasing the volatility and scalping the markets, in volatility in a short period of time, or moving with the markets over different periods, or with price movements on the market, and what I'm going to be doing is I'm going to be showing you those two. But the other two that I will show you in the near future is the 21-day movement and entry exit strategy of the ATR, and obviously the 52-day entry exit strategy using the average true range. And guys, well, let's begin with the ATR. I don't want to make the video too long. It's actually quite simple to understand. Let's start off with the average true range, the volatility. People's like, you know what I'm saying? It's like I caught it using ATR. I caught the volatility using average true range, and everybody's like, please, can you teach me about the ATR? Teach me about the ATR. ATR is very simple to understand. Very simple to understand with regarding volatility in real time. Like literally when it kicks in, when you see the average true range, you are going to know that volatility entered the market. How do I know? Let's start off. This yellow line over here is the average true range indicator, guys. That is the indicator, the yellow one. That is the average true range indicator. Now it will tell you if there's volatility in the markets, or is it flat in the market. There's no volatility in that period and time. So in the 1 minute period and time, as we can see over here, I just want to show you guys, because obviously this always shows the ATR the best, especially when I need to explain. Okay, and now that I'm explaining it to you guys, the average true range, how do we know? And they asked me, Ken, how do we know that there's actually volatility on the market? This is how you know. This average true range signal, that indicator is pointing upward. When it is pointing upward, every single time when it is pointing upward like that, there is volatility in the markets. Always. It doesn't matter if it's from the bottom of it, like this one over here. It doesn't matter. That is detecting volatility in the market. When it is pointing upward, it's volatility time. Doesn't matter if it's at the bottom, it's detecting volatility in the markets. But the height of that will tell you how much volatility there actually is. So if we go back to the 1 minute chart, as we pay attention to both these long candles over here, these two long candles, the red one and the green one, when we pay attention to that, we see that the average true range was pointing upwards for that volatility. And while it was pointing upwards, we see that there was mass volatility coming from the red one, and there was mass volatility coming from obviously the green one as well. But now people say, like, how are we going to know in what direction is the volatility moving in? Okay, guys, that's why I have my favorite, the relative strength index over there. The relative strength index, it tells us is it a long or is it a short, or if You don't understand what that means? Is it a buy? It is a buy trade or a sell trade. Okay, so we know that we see, okay, as we can distinguish between these two over here, we see that the volatility was up over here, and then this candle over here, the red one, we see that the relative strength index was pointing downwards for that one, going down this way. All right, and then we see that there's volatility in the market. So we see that obviously with that red candle, we see that the volatility was moving downwards. And then all of a sudden, before the markets close, because I'm giving you a demonstration of the markets close, so we see that, oh, volatility, we still see volatility in the market, very high volatility, mind you. Okay, how do we know? Okay, we can distinguish a candle over here, but how do I know it's a buy? Because the relative strength index is on a buy, and there's the volatility over there. Number one, is there volatility? Yes. Number two, in what direction is it going in? Upward. And then number three is we can see it on the chart over there. And then obviously I can't put number 4 on here because that's actually entering the trade quickly, so you can actually grab, you can knack on that volatility, or unless you actually had a sell stop or a buy stop in position to catch either or of these, or whenever possible news feeds are coming, you got your sell stop or your buy stop in position or whatever, like at nearing the time frame of that. So you can catch that volatility when it actually does, change. Okay. Average true range. How do we know there's volatility in the market? It's pointing upwards, right? This is pointing upwards, right? In what direction? We'll see with the relative strength index. Is it a buy or is it sell? It's either sell down, buy going up, as we can see here and as we can see here. Right. Awesome stuff. Well understood. I'm sure you guys got that right. Now, let's see. Average true range on a long period of time. Let's go with a weekly chart. Right. Weekly charts. Weekly charts. Average true range on a weekly chart. Now, how are we going to know the average movement in price on the markets, right? Average movement pricing on the markets. How are we going to know that? Now, we're going to go here. At the bottom window, ATR 1527.94. That is saying on my indicator, I'm doing the average true range on a 15 period, and that is giving us a calculation of it moving at an estimated price range of $27.94 on a weekly period. This is its average moving price. It's not the actual moving price, it's an average. So averagely we're moving at more or less this price on a weekly basis, somewhat here on that price range over there, right there, average pricing. Okay, now how do we know that it's actually moving in that price range, Ken? How can we distinguish that? Let's check the history of the weekly candles and how they're moving. Some of them are going to change in pricing due to there was quite a bit of volatility in that week, but we can more or less distinguish what the price is, right? So let's go to the height of this red candle over here where this one is. Let's start on the top of that candle, right? So we look at it, it's going to be 132445, right? Now if we go down by 27, let's say 28, it should give us about 1296, maybe, more or less. So let's follow that candle from the top of the candle. They're saying that the price initially, the closing price of that in the week should have been, or the bottom of that candle should have rather been somewhere around about, at a $28 price range. So let's start at the top there, 24, right? Then we go down. That's sorry, my bad, over there, and let's go down, right? 1 4 is about $10, right? Let's go again. 1 3 or 4 is about, say, about $20. Say about $20 to the bottom of that candle. Yeah, it was more or less about a $20 movement round about there. So more or less the average true range round about, say, about $20 plus or so. And then over $20, about 20 something dollars, and then this is 1303, and then we go up with it. 1303, 113 is $10, 123 is about $20. So we see it now, another 20 something dollar movement. Then on this side of the candle this week, as I know this week because I moved with this, it was actually much higher than that. So 22 12 was $10, $20, and this was I got a clean $30 movement on this. It was actually over $30. And then when we come to the bottom of this candle, it's 1 to 8 1.74. So that 27.94 movement, we should be looking, say, about, say, let's go up, right? 181, and then it's gonna be 91, that's $10, 130, $20, and then obviously, we hit the height of that candle already here. So it's almost making that price range. But as we can see over here, this price range didn't do that amount over here, and it didn't do that amount over there. Why? Because on the past few days on the gold over here, as we can see, it has been consolidating. It has been consolidating. It has been consolidating. So right now gold is in consolidation. So that average price movement really wasn't for me on the gold, and I was like, okay, cool, man, if I can ride the average movement on that at obviously 50 cents a pip, obviously going up, would give me more or less about $150, on that trade, for the week, on that one trade. And that was gonna be good for me. Extra $150. I'm in South Africa. Times that by 13, and it's payday. Even if I make $200 extra for the month, $200 times 13, that gives me 2,600 extra money, and that's groceries and stuff here. So I'm happy. I'm happy. Oh, obviously we make way more than that, but I'm just giving more or less an example. In other countries, you might have a little bit more buying power, but definitely with dollars in South Africa, it's way more than way more. Because my brother-in-law is over the moon when he comes to South Africa, and he is over the moon when he comes here, because his money just goes a much longer way, especially like for him. So he smokes his cigarettes, so back home cigarettes are so expensive. In South Africa, it would be like over R100 for cigarettes, and they at home for him. But when he comes out here, it's like 30 something rand for his packet of cigarettes. And obviously now buying power, he can buy himself about, like, say, about 3 or 4 packets for one packet that he can buy in America. So it really does give him more buying power. I'm just giving an example with cigarettes. It's actually a bad idea. Shouldn't be doing that, but just an idea. All right. Okay, let's check the GBP JPY on the weekly. All right. Let's see. Okay, this price movement over here for the Japanese yen on the ATR over here, as we go there, we see for the week it was around about a 3 yen movement on the markets, was doing about 3 yen. So as we come over here, for a 3 yen movement, we start at the bottom, so it's 143. As average movement was around about 3 yen, so 143.195. So we go up, that's about one yen, say about 2 yen, and damn near, I would say about 3 yen. So we done a 3 yen movement on that weekend, and I mean, like, for that 3 yen was a 3 yen movement. That was nice. That was nice, guys. That was nice. I didn't get the whole week, but that was nice. I coined it, man. And people were asking, like I said, hit my average true range, and like guys were asking me, like, wait, what's average true range? Guys, you keep on saying I'm holding ATR, I'm holding ATR. What are you talking about, man? That's what I'm talking about. I'm holding the trade from somewhere in here where I got in, and I closed out my trade up here when I did my stop loss. So sorry, not a stop loss, sorry, my take profit. So more or less, so in between they made the $200, off this movement, because this whole movement. Imagine catching it from the beginning to the end. That's 300 pips. So and I double traded it, so that's what gave me the $200 take profit. So I double traded it. So sometimes I'm naughty. I do twin trading on something. I actually double traded or triple traded from time to time, and sometimes it was dangerous for me at time to time. I had to actually stop doing that. But if I really have that knack, and I know my news, and I got my news feeds, and I've done full thorough research, and I've been sitting and I'm watching all these news channels, Sky News, CNN, checking Al Jazeera out from different perspectives, news from different perspectives, from different people, different perspectives, and I can put a specific picture in my mind. And okay, cool, the moving averages will be perfect to use so long. Okay, everything is in accordance with whatever certain stuff that has been given. But if any public figure speaks and they say something wrong, and your trade was supposed to go in a buy position, and they say something wrong, that can affect the trade negatively. If they all of a sudden just want to be all arrogant all over the show and be like they want to be starting a war with this country, and this country says, oh, we're going to do this and we're going to do that, it's not good for business. Okay, we're going to cut your country off from this, and we're going to cut our fine funds like this, we're going to cut it out from. It's bad for business. You're not going to get good movements. It's bad for business. It's bad for business. Okay, it creates a demand for the commodity that's the strongest, that's coming from your country, but still it's bad for business, for the country that has said that president or that public figure, whoever. I'm just giving an example. I'm just speaking in layman terms, guys. There's a lot more intricacy behind this, and a whole lot of more deeper detail behind it. I want to keep it very simple, and not be all eloquent all over the show, but guys, just have news and pay attention to it, and know your countries, know the currencies you're trading with, guys. It's highly important. Okay, on the average true range on this movement over here, this obviously from here, started here, and then it went up from 145.8. It went up, that's one yen, 148. That's about roundabout 2 yen, somewhere around about 2 yen, up to 2 yen, almost 3 yen, 2 point something yen, 2 point something yen, more or less. And then from there, obviously, the market came down, and that's where I entered. I wanted to, or essentially, I saw more or less that JPY was increasing in strength, and I actually want to ride the wave down as far down as obviously JPY is moving in. So more or less, guys, that's how you detect ATR in long periods in time. And guys, it's your money at the end of the day, so you wanna know that you are placing accurate trades and stuff. Okay, so that's your lesson on ATR. And some people are wondering, like, why not why not like on 14 periods? Everything is like calculated on 14 periods. Mine is just calculated on 15 periods. Everybody has a difference. It goes from 10 to 15, and all these different periods will be over a specific amount, a number of days, up into a month. So mine's 15 over 15 days, so up to 30 days in a month. So that's why I use a 15 period, so we can check it over 15 periods. And that's obviously my mentor trained us, with the ATR, and we've been using 15 periods, and 15 periods is fine, as you know, my through specific studies and stuff, So he was a former broker as well, and and we have another mentor with our, moving averages and stuff. And guys, always pay attention to, never forget your training. Whatever you've been given. Some guys have been trained by, obviously, by my mentor. My mentor is J Rock. So he also trained me on average, the average, moving averages. So he was the guy that trained me on moving averages. And my other mentor trained me on ATR, which was my mentor through the academy that I was studying through. So, these go hand in hand, because you want to know average movements in a market. So you want to know more or less what's going on. So if you have moving average studies, you can use that also to determine a market movement as well. Is it going to go up, or is it going to go down, or whatever? Have that knowledge with you. Have it in your, have it, guys. Have that knowledge. It's good to have that knowledge. And moving averages, we as retail traders are determining an average movement in a market at all times. The average true range just does multiple calculations for you. It tells you the time, the period, and the price, and it moving in between that at a specific given point in time, trying to give you a statistical analysis of what is the average price movement. So that's more or less how you can determine ATR, is by that. Some people, you can use your harmonic scanner. It's fine. People use an harmonic scanner. Okay, maybe we can enter here. We can maybe have our first take profit there, and our second take profit, third take profit over there. What I do is I double trade it. I double trade it, guys. I double trade it, and I milk it. I double trade. I twin trade it. I take two things and I trade it as far down as it can go, guys. I take it. If I know that on GBP, JPY, GBP is not doing good, and the news is just against GBP, I'm going to go JPY. JPY is a currency. It's going to come down and down and down and down. Damn. And you can eat it dead, because it's not looking good for that currency, and JPY will increase in strength. And so you milk it. I milked the JPY. GBP, JPY, dangerous currency, milked it on the ATR. It went beyond ATR. It went beyond ATR. And so even though it went beyond ATR, I just had obviously just below my take profit, I had obviously a sell stop again, just in case it goes down, and it did go down. And so that's how we made some extra money on it. It was a killing. We weren't doing good at all with regard to that $134 trillion business thing between the British and the euro. So there was a whole bad publicity there, guys. So that already tells you GBP is not going to be doing good. So you get into your sells early, and you hold that sell. Even the market can do whatever the market wants to do, but you in that sell already, and all of a sudden it just came down. So obviously getting onto that ATR and getting down and literally milking that market for somewhere like almost damn near the top and going all the way down and going all the way to the bottom and actually selling it somewhere over here and still going down and then taking and then poof coming all the way back up like that, guy. So it was insane. It was insane money, insane money, insane money. And especially when you're using long-term ATR, make sure you use proper risk management, because you don't want to say, okay, yeah, I'm a whole ATR, okay, cool, man, I'll just do it like on $1 a pip, and you can't afford to hold it. What happens if it goes in the opposite direction first before it decides to go in the right direction? You're screwed. So that's how it works. And guys, if you want to hold these long-term ones over here, try, guys, using quite a longer stop loss place, like 2 times the ATR movement. So if you got this this over here, this $3, if you're gonna move according to the 3 yen movement, do your stop loss at about 6 yen. So give it twice the room, so you got breathing space, for the market to rectify itself if it does go in the opposite direction. Use proper risk management, please, when you're doing this. And if it hits your stop loss, guys, accept the loss. Accept the loss. Accept the loss. Always accept the losses on your trades. Always accept the losses on your trades. Some people you want to move the stop losses from time to time. And I also got told that by my mentor, and there was times I didn't listen. And I moved it and it got worse and it got worse and it got worse and it got worse and it got worse. And that happened to me with the Euro NZD, and it went in the opposite direction. And when I was just pushing it higher and pushing it. Now it's going to rectify itself. It didn't rectify itself, guys. And went to sleep, and it went and it hit the stop loss, and it took about $600 of my money away from me, and my risk management wasn't good either. So it was terrible, guys, terrible. Okay, it was terrible. I had a vengeance on Euro NZD. I had a vengeance on Kiwi. And I took Kiwi to the cleaners. I got all my money back double. I took it to the cleaners. So it was quite good though. I had fun. I took it to the cleaners using ATR. Took it to the cleaners. So it was actually quite a fun experience. But hey, guys, thanks for watching the video. That was the video on ATR, guys. And please ask questions. Please ask questions. Guys, please ask questions. You're going to ask the questions on the calculation. Don't ask about the calculation, because it's not going to make any sense to you. It's just a science. This is a mathematical calculation, over the period and the time, and obviously, the movement, the price movement. So that doesn't make any sense to you. But if you're a math muffin, please feel free to ask for the formula and stuff like that. Okay, guys. But you guys have an excellent trading moving forward. And this is from myself, Kenyan Landers, or at the Godfather of Crypto, or also known as Gabi. All right, keep it out, guys.